Hello everyone, Rahul Shah here, trying to make investing accessible and profitable for the average investor. Hearing about the ceasefire brings a huge sense of relief, doesn't it? Nothing lifts the mood in the stock market and makes people want to invest than a calm atmosphere. Now let's bring in penny stocks. These small businesses suffer the most when things get shaky economically. Investors turn risk averse and shift their investments to larger, more stable companies. This shift often causes penny stock prices to tumble. Here's the interesting thing: penny stocks might drop fast in tough times, but when things get better, they can rise just as fast. A ceasefire can act like a signal, creating a chance for big gains in this part of the market that people often ignore. Now, some of you are wondering, aren't penny stocks just a huge risk, like betting everything where you either hit it big or lose it all? Sure, penny stock investing can be risky sometimes, but we think there's a better way to approach it. It's a more careful method designed to keep your money safe while still reaching for solid gains. We like to call it the heads I win, tails I don't lose much strategy. Let me repeat that: heads I win, tails I don't lose much. Let me explain it another way. You see, there are two kinds of penny stock investors: the ones who believe in investing in moonshots, and the other ones who believe in investing in steady climbers. Now, the moonshot penny stock investor is looking for those huge multi-baggers where if you get it right, you can land a huge multi-bagger, a 10 or a 20 bagger if you will. But if you get it wrong, you can lose all your money. The steady climber, on the other hand, is about finding those 2 3 baggers if you get it right, but losing only 20%, 30% if you get it wrong. In other words, while you get a lower upside in steady climbers, your downside is also limited. The moonshots, on the other hand, are hero or zero stocks. Now, I personally prefer investing in steady climbers as I would like to reach the top using a ladder and not directly take a big leap. The danger in taking a big leap is that you can have a nasty fall and critically injure yourself, which in investing parlance could mean losing your entire capital. My focus, therefore, is on finding penny stocks with big potential gains, like a 50% to 100% increase in a year or two if things work out. The goal is to pick companies where the risk of losing too much is lower, maybe just a 20% to 30% drop if the initial guess isn't spot on. Now, this strategy balances safety while still hoping to see good growth. Today, I am thrilled to talk about 3 penny stocks that, from my research, seem to match this exact profile. Now, these companies are not just picked out of nowhere. They have a track record of strong financial foundations and are offered at what we think are appealing prices. These stocks deserve a spot on your penny stock watch list. The first stock to keep an eye on is Vito Switchgear. Now, Vito Switchgear has been in the business of making electrical products for quite a while. At present, it manufactures wires and cables and electrical accessories and trades in ceiling fans, LED lights, and others. The company has manufacturing facilities at Haridwar and in Mumbai. Their history shows consistent operations, and the finances appear solid based on the records. Their stock trades at a price that looks cheap compared to their earnings and assets. This fits well with our heads I win, tails I don't lose much strategy. The next penny stock worth noting is Visakha Industries. Now, Visakha Industries has been around for a long time and works in the building material sector. The company has made a name for itself in the industry, and its financial data points to a solid balance sheet. Like Vito, its current stock price shows good potential to reward investors. If market sentiment gets better after the ceasefire, the stock might see gains. At the current prices, the risks of loss appear to be under control. Imami Paper Mills is another penny stock to keep an eye on. Imami Paper Mills has been making paper for a long time. They have a solid track record and the financial health seems stable. What stands out right now is that the stock looks undervalued when you compare it to the assets they hold and the possible boost in economic activity in the future. This could make the potential returns more appealing than the risks involved. That said, this is not a message telling you to go and buy the stocks without thinking. The heads I win, tails I don't lose much mindset still means you need to research on your own. This video is just to share some insights and should not be treated as investment advice. Spend some time reviewing the financial details, get a clear picture of how the businesses work, and figure out if they align with your investment plans and how much risk you can handle. Now that the war is out of the way, this is a good time to explore specific penny stocks, and these three could be a good starting point. Thanks for watching. If this video helped you, please give a like and subscribe to keep getting such stock market insights. Share in the comments which penny stocks catch your eye. We always enjoy hearing your thoughts. Goodbye and happy investing.